saw a double-digit decline in sales, but it does look like it's getting better from the prior 2 quarters and that you're able to get higher margins, I guess fewer promotions. Tell us what you're seeing out there.
Yeah, well, first of all, Sarah, it's important to set context, and we're still clearly operating in a pandemic, and that's influencing how people are shopping across all industries. I think for Kohl's, what we shared today is really the stabilization and the strengthening of our business. So we did see our sales accelerate from the prior quarter quite significantly. I think importantly, we saw our profitability increase quite substantially, which is a testament to how the team is navigating and managing the business, and really proud of the balance sheet. I mean, we ended the quarter with $1.9 billion of cash on the balance sheet, while also paying down our revolver this quarter. And as you just mentioned, announcing that we will reinstate our dividend next year.
Yeah, a lot of the analysts are impressed with the strength of the balance sheet and obviously the debt raise, Michelle. But how do you get that sales number back in the black? And how long is it going to take? And do you worry about loss of share to some of the retailers like a Target, which was deemed essential and allowed to stay open during the pandemic?
Well, Sarah, I would answer that in 2 ways. I think first, while we're in the pandemic, we're going to clearly be where the customer is. And this has given us the opportunity to lean into digital. That continues to be a strong channel for us. It was 1/3 of our sales this quarter, grew more than 25%. We expect that to continue into the holidays. I think importantly for us, it is about the strategy that we shared about a month ago in terms of how we further separate ourselves in the overall industry. And I'm really optimistic about that strategy. I do think that it will reinstate growth for the company. And, you know, for us, we took the opportunity, and we're in the midst of a crisis, and it's tempting to just focus on the here and now. And clearly we are operating very well with the conditions that we're navigating. But we also took the opportunity to look ahead and study where the consumer is going and how they're living today. So what we see, and these are strengths of Kohl's, but they're living more comfortably, more casually, they're more active. Clearly, omni-channel and digital purchasing is a big acceleration, and then the role of value. So we took all those things into consideration and formed our new strategy, which is to be the retailer of choice for the active and casual lifestyle for families. And we think that that will really separate ourselves based on the white space to serve that active family across all the brands we offer and all the categories of goods that we sell. And again, supporting our omni-channel platform, we serve more than 65 million customers. So I am very optimistic as we look to 2021 and beyond.
I know you're saying it, and you've tried to distinguish yourself with the athleisure wear, which makes up a good chunk of your sales. How else, Michelle, are you combating the narrative on Wall Street and beyond that department stores are just stuck in a funk, and they were before the pandemic, and like many other things, the pandemic has just accelerated trends to online and away from these sort of bigger box stores where you can buy different things, not to mention apparel is not really a growth category right now?
Well, Sarah, I really don't think about Kohl's as a department store. Our characteristics are actually quite different. So first, I think about location. 95%, the vast majority of our stores are off mall. And I think traditionally department stores have been viewed as that mall anchor. So that's number one. I think secondly, the categories that we sell. So I talked about how we're going to really shift even greater focus into this active and casual lifestyle. Today, our active business is 20% of our business. We see that growing to 30% or more. We way outshare in the department store sector on active and even on the home category. So that's been a big growth engine. Again, significantly more share than the department store sector. I would say the way we lay out our stores, again, very different than how one might think about a traditional department store. You can browse as long as you want, but it's also easy and convenient to get in and out. We're leveraging that footprint in many ways. So it's not just to sell product, but we are using the store for fulfillment. 40% of our digital orders are being supported by the stores in some way. And we've introduced new innovations like Amazon Returns, which we're just anniversarying for about a year. So I think there are just so many factors, and I cap it off with we serve families, and now we're going to further distinguish ourselves to be squarely focused on the active, casual, and wellness needs of the families that we serve.
Michelle, remind us what your footprint is in the U.S. today, and where do you think it could be in 3 or 5 years? Of course, everyone's expectation is less bricks and mortar retail, more online retail. But are there opportunities to seize cheap locations as fellow retailers go under?
Well, first, I would say that we view our stores as one of our biggest assets. We have a fleet of close to 1,200 stores across the country. They generate a lot of cash, so it's been good to have them back open. More than 90% of our stores generate over $1 million in cash a year. So they're very, very healthy. And so as we were just talking earlier, there's a lot of industry disruption happening in certain sectors. I think Kohl's is really well positioned to take advantage of that market share. And then over time, we'll see. I mean, we're constantly experimenting with new store formats, smaller footprints. And so, I mean, right now we're focused on navigating the pandemic and continuing to strengthen the business. But, you know, over time, there could be opportunities for Kohl's to even build more stores.
Shepard Smith here. Thanks for watching CNBC on YouTube.